Traders from around the world, what's going on? It's Ricky Cadden back again. First video of the year for 2022. I'm absolutely pumped for this video. I have a few things to share with you, but guys, I hope you had a fantastic Christmas and a fantastic New Year's. Let's dive in and take a look at what's been happening with the stock market. Now, the SPY, guys, we have had a fairly fierce breakdown. We had a fantastic little double top, a lot of bears coming in. Now, what's really interesting about the SPY right now, guys, is we actually did not bounce at a previous level of resistance. Now, usually if we are going to continue higher like we did back here, you guys can see we break out, come back down, retest previous resistance, and then trade higher. Same thing happened back here. We had a really nice breakout and retest and then cruise on higher. However, if we take a look at what's going on right now, we had a nice little breakout, a breakdown, failed to find support, and we're currently retesting or coming close to retesting the neckline of this double top. Now, I'm not saying that the market's going to fall off a cliff and go to zero, but what I am saying is we probably are going to be a little bit volatile in the markets over the next coming weeks. And just look to protect yourself on the downside if we do kind of come back up to this resistance level and then find resistance and then break down and probably come back down to the 200 simple moving average, as we have not been there pretty much since almost since COVID, really. So we had a nice little breakdown during COVID. Then we traded bullish, and then as soon as we broke out back in June, we've held the support and not closed below the 200 or come down to the 200 and bounced yet. So guys, just keep that one on your watch list on the SPY. Just be very, very cautious up here. There is a lot of volatility starting to creep in as well. Here's the EMinis. Now guys, EMinis, you guys can see here, we are at a very pivotal level here. I say pivotal because we have rejected this level quite a few times. Now, if we do obviously have a strong close above here, I'm not going to be overly convinced until we can kind of break out of this level and hold that support and then cruise on higher. Then I would suggest that we're probably just going to be another nice little higher low, nice little dip buying opportunity than we do cruise on higher. But if we do start to break down here, then we could possibly see a little bit more of a pullback. Also, if we have a nice little higher, lower high here as well, and getting some divergence on the RSI or one of the other indicators, I'd expect a nice little pullback as well. First ticker is BYND. Now, BYND. Now, a lot of people looking at Beyond Me have said, I wish that I bought during COVID. Back here, there was a fantastic opportunity as this did kind of just skyrocket from $60 all the way to $200. Well, guys, your wish has come true. We are back down at this low level. Now, what's really interesting, if you take a look at the weekly chart, is this candle right here. This nice little high wave. This high wave spinning top candle, you can see the volume that's coming in on that particular candle as well. So if that volume does get taken out, then we'll most likely break down and head on lower. But on the daily chart, guys, I mean, this is really just consolidating. We are in what is called a accumulation phase, and you can see here that we are just kind of building pressure. Now, we can build pressure and then break down lower, but we are pretty low and back down to its IPO level. So those of you who had missed opportunities on Beyond going higher, just expect that we probably could see a nice little break bullish very, very soon if the trend does have a nice little reverse. Here's Coin. Now, Coinbase Global, ticker symbol COIN. We have currently got a gorgeous Morningstar reversal pattern that is forming right now. Fantastic volume. However, guys, the crypto market has been getting hammered lately. So obviously, if we do start seeing lower lows on the cryptos, we'll probably start to see some lower lows on Coinbase. But eventually, guys, if we do bounce in all the crypto markets as well, then you'll start to see this consolidate and then start to rocket on higher. So if you are looking at picking up a few shares, I mean, this is a buy low location. We have been bouncing off this region just a few times before. So if you were looking at trying to buy some shares around 230-ish, now is your time to pick up a share or three of Coinbase. So just keep that in mind. We are very, very low. And obviously, if you are looking, if it does go lower, then you can look to dollar cost average in, or just have your nice little stop below that sensational hammer candle with amazing volume. That would be a perfect trade setup. Now here's Microsoft. Now Microsoft is actually not looking overly strong. Now this could be a really nice dip buying location, as we did come back to a previous level of resistance and we found support. We have, however, had a triple top. Right now we've had a triple top. We are currently retesting that neckline. The market's not looking overly bullish. Once again, Microsoft has not come back down to the 200 simple moving average since COVID as well. So it would be pretty nice to see this come down that little bit further and then reach this other lower trend line that we've got drawn here on Microsoft. But if we do turn around and bounce here, that also makes a lot of sense, as there is another nice little ascending trend line as well and previous support on Microsoft. Here's the Aussie 200. Now the Aussie 200, we have this gorgeous little double bottom breaking out, came straight back up to resistance level. A lot of traders thought the market was just going to go screaming bullish at that point, but never buy into resistance, guys. This was extremely high. Even if you take a look at the RSI, we were almost up at that 70 level, so we are starting to pull back. But funnily enough, guys, we are coming back to the neckline of that double bottom. So just keep this one on your watch list. Most likely what will happen is we'll probably just consolidate sideways. And then if we start to break the 100 or the 200, we'll probably see a nice little flush back down to 7,100 on the Aussie 200. Now here's APT. Now APT, I want to take you back to the gap that occurred back here. Now I did give this one to my traders in the live trading floor. If you aren't a part of the swing trading floor, I'll leave the link in the description below. But check out the analysis that you guys are currently missing out on. If you were in APT back here, you would have been absolutely spewing that you didn't have this analysis sooner. But check out this video, guys. I'll rewind the video for you right now.
APT, Afterpay. Afterpay had a bearish gap and go just recently. So I would expect this probably to continue a little bit lower. We have a massive gap to fill. Doesn't mean we will fill it. Weekly chart doesn't look super duper strong. Weekly chart doesn't look super duper strong. Daily chart looks a little bit weak, in my opinion. We have got a lower trend line support. So if it is going to hold up, it really needs to bounce right now. It really needs to bounce on APT. Probably in the next few days. Should know its direction. If we trade up a little bit, I'd actually expect it to find resistance up here, just purely based on the sentiment of this gap. And we do have a double top, and that would be roughly a retest of the neckline. If we do trade higher, I'd probably just look for a bearish play on this one.
Absolutely incredible. Now, I did mention back then that if we did trade back into this zone after this particular bearish gap and go, I did mention I would expect us to find some resistance. And you can see we found some resistance right at that level, and we did go bearish. I did say that you would want to be looking for a bearish play. If you were to take a short below here and a stop here, this pretty much would have paid for your whole real life trading subscription and then some. I mean, from that level, guys, we would have dropped, from where we are to the absolute lows, almost 40%. Now, where we are currently on APT, we're currently sitting around 77. If you take a look at the weekly chart The weekly chart, that $70 is a really nice support level from previous levels back in September of 2020. Now, obviously, APT with Square taking over and Square has been going lower, APT is going to get affected as well. With the volume that's coming in today, I do expect us to probably bottom out. Right, we did get a nice little retest gap, bearish. What I would be looking for is the shorter term moving averages, however, to start breaking above the 10 EMA and closing above the 10 EMA before we start to find some higher lows and then a nice little reversal period. But this was an absolute killer of analysis and trade if you did take them. I know there were a few traders at Real Life Trading who did, but nice little breakdown, retest of the 50-day EMA, and then, yeah, smashed it lower. Here's RIO. Now, RIO is actually in a nice, gorgeous bullish trend. Is now the time to go long on RIO? Probably not. If you take a look at the RSI here, we are super duper extended. We're currently sitting at around 81. So guys, do not look to buy this right now. Obviously look to buy on a pullback. Where would be a really great time to buy? Probably at a support level or a moving average, a shorter term moving average. Right now, we're pretty extended from the 10 EMA. We have not really retested that for quite some time, but I do expect this one probably to pull back, to around the 20 and or the 50-day EMA, consolidate sideways before we do cruise on bullish. But RIO, fantastic if you did buy back in September. If you take a look at the weekly chart as well, longer term moving averages, it was the fantastic buy the dip off the 200 simple moving average. Absolute killer trade if you did take that one. Here's Woolworths now. Wow. Woolworths, ticker symbol WOW. We have a huge triple top, gap down, retest of the neckline. I mean, this one is just heading back down to probably $35. Keep this one on your watch list, guys. If you do take a look at the weekly chart, however, we are coming back down to the 100 simple moving average. Generally, we do bounce off this level. So if we are going to bounce off the 100 simple, it's pretty much going to happen in the next few weeks. Otherwise, we'll most likely see probably not 35, maybe even 32 or 33, which is around about the 200 simple moving average, and a massive key level of support, which is this massive green line here that I've got here on Woolworths. But fantastic triple top. You guys can see this on the weekly chart. Gorgeous little retest of the neckline. And you guys can even see this evening star reversal pattern that did form a few weeks ago as well on a weekly chart. So that was a very nice bearish signal to either protect yourself on the downside and or go bearish. So well done to the traders if you did get some bearish action on this one. The shorter term moving averages on the daily chart as well, all crossing over to be bearish as well. So keep an eye out for that one. Now, crude oil, I did mention in the trading room on Monday that we would probably see a nice little pullback into the 10 or the 20 EMA, and then I expect us to get to 85. We have had a nice little bullish push with volume. I do expect this still to slowly but surely grind high. If we get to 85, we'll probably either pause for a little while and then come back down, or we will pause for a little bit higher and then break out and go higher. This is a very key level, $85, guys. I mean, if you take a look at the weekly chart as well, if we do break above 85, we're going to be heading straight to 92. So that will be very, very interesting. As we have not been here, I have mentioned this before, but we have not been this high since 2014. So that would be absolutely amazing to see crude oil. Obviously, we will feel it at the Bowsers as well with petrol prices going higher. Now, gold is looking like it's about to break out and go higher. We are closing above the shorter term EMAs on the daily chart, on the weekly chart, on the longer term moving averages. We have been riding the 100 simple moving average, but creating higher lows. Now, this particular pattern, guys, you guys do know this is an ascending triangle, which is a bullish pattern. We're just building pressure, right? We're building pressure, struggling to go lower. Now, obviously, the dollar index too, however, if you take a look at the daily chart, is creating lower highs, and it's a descending triangle, right? And by the looks of the dollar index, we'll probably start to see a nice little breakdown to around 94. So I do expect a nice little rise in gold. Not only will I see a rise in gold, but if take a look at the Aussie dollar, if you are a forex trader, you'll probably see a nice little rise in the AUD USD very, very soon as well. We have a little bit of a resistance here at 72.91, but then above that, guys, we've just got the longer term moving averages, and then 75 would be the next target on that. All right, guys, that's it from me. I'll be back on Friday with another real life stock review just for you. Leave me a comment down below if you want me to review any stocks for you. It's good to be back. Let's crush 2022 together. But until next time, love life, live life, and trade it. You guys absolutely rock. Talk to you soon. Bye.